In Stacking Up today, Michael Palmer, Group 1, joins me now for a look at our final trade of the day. Thank you so much for coming on the show.
Good to be here.
Michael is a pit trader here at the Chicago Board Options Exchange, so he is very privy to what's going on with money flow coming from institutional players, or so-called smart money. And Michael, as we start a new year, what do you think the smart money is doing? What's the trade there? Is it a bullish trade, a bearish trade? What do you think?
I would say that we had a lot of big events in the second half of 2016. We had the Brexit, obviously, in late June. That was a huge financial event. We had the election, and really just the whole lead up to the election was a lot of trading events. Comey letter comes out. People were trading around what happened with the market there. So there was a number of events that we saw all year. And of course, in December, we had the Fed decision raising rates. That is going to be a big theme for 2017. People are going to look at these Fed meeting dates, and they're going to be trading around them. They're going to be wondering if they're going to raise rate a quarter point. There's some debate whether or not in 2017 we'll see a half point raise at some point. So it should be an interesting year for watching the Fed. Right now, it's still quiet. It's the holiday time, and we always say that we have 3 holidays before January expiration. It's Christmas, New Year's, and Martin Luther King. That tends to kind of dampen volatility and volumes until we get into a more fluid atmosphere after that.
It was a big year in 2016. Are you sensing some exhaustion just in terms of maybe volume slowing down and people saying, okay, let's just take a breather here, because so much did happen. We saw a lot of rocking and rolling in the markets. I mean, really tremendous. I have not seen it for a while like that. What we saw last summer and then after the election.
Yeah, it was an interesting year from a lot of perspectives. It should be remembered that January of last year, and that was after a quiet holiday period before that, was the highest settlement we saw all year in the VIX. Settled 2740 in January of 2016. That was due to issues with China and, more importantly, oil. But it just tells you that as these years roll on, things come up, things make it busy. We obviously have a new president. There's going to be a whole bunch of new policies. And I think it would be wrong to kind of assume that it's over. I think the exhaustion, if we're feeling it now, is about to go away, because there's going to be a lot of new in the world.
So do you think there'll be a lot of new money coming into the market?
I think there's going to be a lot of people who want to protect their portfolios when we start seeing things happen around the world and with policies. That will come in the form of people buying puts, they'll be buying VIX calls, they could be doing any of these things. But I do think that we're going to see higher volatility when we get into the meat of the new year.
So protection will be the trade for the so-called smart money?
I think so. I think that right now we've had a situation where people call it the Bernanke put, now it's the Yellen put, where people were saying that the Fed has got your back. I think that general feeling, or at least the comfort in that feeling, is going to abate a little bit in the new year, where the Fed might not really have your back. They're raising rates, and perhaps there are people in government who aren't too keen on the Fed being as much in control as they are. So that is going to make volatility go up.
Thank you for coming on the show and for your insights.
You got it. Good to be here.